John Higgins, Mortgage One. Happy Monday. So last week we had the Federal Reserve meeting, and as we alluded to in last week's update, the Fed doesn't look to be in any rush to cut interest rates anytime soon. We've had 100 basis points of cuts in 2024, and the future for what the Fed may do is a bit cloudy, especially after Fed Chairman Powell came right out and said that we do not need to be in a hurry as far as cutting interest rates. So not all great news for the real estate or the mortgage industry, but if we take a look at where rates are today, we're certainly in a lot better position than we were just a couple weeks ago. This is a chart of mortgage-backed securities, and as price goes down, interest rates go up. And as we headed towards the end of 2024 into early January, you can see that the graph was basically straight down, and we hit some of the worst levels that we'd seen in the previous 12 months. I do follow a gentleman, and his mantra is the cure for higher interest rates is higher interest rates. And we certainly suffered through that at the end of last year. But we've made a really nice bounce off the lows. And if we were just above 7% as we headed into 2025, we've made a very nice bounce. This chart shows 150 basis point improvement in our mortgage-backed securities. And that's resulted in us going from above 7% on 30-year fixed mortgages to just below 7%. And the tone in the market seems to be a little bit better than it was just 2 weeks ago. So this whole market seems to be data dependent. What does that mean? Well, 2 weeks ago, we had information on inflation. Last week, we had the Federal Reserve meeting. And this week, we've got the jobs number. So at the end of the week, we've got the non-farm payroll number. That is the big payroll number for the entire month and probably one of the biggest movers in any month. So we'll see what comes of that. If we get a number that's maybe a bit below expectations, then that would be great. A little softening in the jobs market would be okay. We're not rooting for a bad jobs market because we do need people with jobs to buy homes. But if the jobs market softens just a little bit, maybe more than expectations, that might be a little bit welcome news. So we'll give you an update on where that number comes in next week. Until then, have a great week.